Hey everyone, it's Zack Beck. The recession is here and many people are concerned about what to do with their finances. We've seen stock market volatility, interest rates rising, the crypto market completely crashing, and now everyone is concerned about what's going to happen next. So what I want to do in this video is break down in detail what is going on in the economy, what is causing this recession, but more importantly, the specific steps that you and I can take in order to navigate through the situation in order to come out of the other side ahead. So let's take our time, dive in the details, and jump into it right now. As previously mentioned, the recession is here, and a recession is defined as 2 successive quarters of negative GDP growth. Now you might be asking yourself, what does GDP stand for? It stands for Gross Domestic Product, which is basically the entire US economy as a whole. And when we are receding, it basically means that we are no longer growing. And from that vantage point, recessions are part of the normal cycle that we go through in our economy. So it's not something to be totally concerned about, but it does have a personal impact on you and myself. You might be seeing this reflected in a variety of ways, primarily through the stock market. You will see headlines of the stock market crashing and it's going up and down every single day. Now obviously there's a lot to be concerned in that regard, especially if you have money invested, but it's really a matter of if you're looking at the stock market from a short-term perspective or if you're looking at it from a long-term perspective. I'll get more into that later, but primarily one of the issues that is driving this issue of recession right now is actually caused by inflation. You may recall I made a number of videos about inflation a year ago, predicting that this is exactly what was going to happen, and it is precisely what has occurred. Now that is nothing special about myself, it was just an assessment of what was going on based off of all of the government spending through the various stimulus measures the federal government passed. Then when you considered additional issues such as the supply chain challenges that were riddling throughout the economy because of the pandemic, it was natural to see that inflation was just around the corner. So from that vantage point, what I want to emphasize is that although we look at things from a macro scale when it comes to economics, we talk about we are in a recession as a country. What I think is very important is for you to understand whether or not you are in a personal recession right now. Meaning that with inflation, we've seen prices increase across the board for food, for shelter, for clothing, for transportation, for utilities, for all sorts of things. Then you think it goes even further with all the issues going on with Ukraine, which is really causing fuel challenges through all of the economy. And when you factor all of that into consideration, you might be spending a considerable amount more every single month just on your basic necessities. So, if you are facing a personal recession, I just want to encourage you in a couple of respects that no matter what is going on the macro scale, the micro scale personally is what matters most. Now, first and foremost, before we talk about finances, I think it's important to have the right perspective. Life is going to throw us challenges and curveballs every so often. So we want to do everything we can to position ourselves, obviously from a financial effective perspective, but from a personal internal perspective, we want to operate understanding that the sky is not falling, everything is going to be okay eventually. We just have to get through this period of time because these types of situations ebb and flow, and recessions are just part of what we have to deal with. Now, from a practical perspective, there are a number of steps we can take. Hopefully you've been listening to my videos throughout the last couple of years, and I've been encouraging people to actually save an emergency fund, which is up to 3 to 6 months worth of living expenses. Hopefully, if you are able to go into that, and if it's necessary now, that is why it's there. If you do not have an emergency fund, you really want to work on building that up. That once again is 3 to 6 months worth of living expenses that you can use just to cover your basic needs. Now, if you're someone who already has that established, or if you're working on getting that established, another thing you want to look at is the debt that you are carrying. If you are carrying a very high interest debt, that is something you want to be very mindful of right now, because we have seen the Federal Reserve raising interest rates regularly now, and they are going to continue doing so moving forward, according to their chairman, Jerome Powell. So if you're someone who currently is carrying any sort of consumer debt that is not fixed rate, you're going to want to do what you can to pay that down as quickly as possible if you have the finances to do so. That is important because otherwise you might find yourself in this endless cycle where you're unable to pay it off for a very long period of time. Now, you'll also know that I talk often about trying to avoid debt altogether, so hopefully you're not in that situation, but if you are, try and get through it. There's resources out there such as Dave Ramsey's debt snowball method that you could look at, and those can be very helpful. I'll put a link in the description for you to check that out if you'd like. If you're someone that invests in the stock market, now could be a little bit of a concerning time because you're seeing headlines and reading of the stock market collapsing, or year to date the S&P 500 is at a certain negative in comparison to where it was just at the start of this year. Whatever it might be, my encouragement to you is that if you've been following my overall recommendations throughout this time, is I generally encourage people to invest into index funds. Once again, I'm just a guy on YouTube, I don't have all the answers, but that is what I do. Because index funds have a proven track record over time to produce an annualized result anywhere between 7 to 10% on an annual basis when you adjust it for inflation and you have your dividends reinvested. And an index fund is basically just investing into the total stock market or a select group of stocks or companies such as the S&P 500. It's a little bit more of a passive way of investing. You're not picking and choosing individual stocks like GameStop, AMC, or the latest hot stock that you see some influencer talking to you about. It's generally just a more passive approach to take. Now, if you're doing that and you're seeing the stock market going down right now, realize and understand that historically, when we go through these periods of time, we will see the total stock market go down, yes, but over a longer period of time, the stock market will continue to go up. That is its trend line. So from that vantage point, my encouragement is that if you're someone who's investing, realize that now is sometimes that you actually have the opportunity to buy at a lower rate. So if you're dollar cost averaging, meaning that you're regularly investing into the stock market on an average basis, whether that's daily, weekly, or monthly, if you're just consistent about it, when the stock market is high and the stock market is low, you will eventually end up with a better situation than you are now. What you want to avoid in this particular environment is selling. You don't want to buy high and sell low. The unfortunate thing is that during the pandemic, some people went behind a lot of these momentum and movement stocks. Like I said, GameStop, AMC, Tesla, a lot of these tech stocks, Coinbase, whatever it might have been. And unfortunately, when you put all your eggs in one basket and you're just going after one company, then you're at the whims of what the economy is going to do to that company. And unfortunately, we've seen some stocks go completely negative. We've seen some wipe out almost 90% of their value over the course of the last year. And that is something that you want to avoid. That is why I personally go into the index fund route. And if you're not someone who's currently in index funds and you're doing individual stocks, that's up to your discretion. With more risk comes more reward. But if you don't want to have the stress in your life and you don't want to be worried when we're facing a recession like we are now, you could take a more practical approach and get into something along those lines, especially if you're doing it for the long term. That is what I do. Like I said, I cannot give financial advice. I'm just a guy on YouTube. But my encouragement to you is this, that you want to find a safe, stable, and practical approach to take. That way you can navigate any terrain the economy throws your way. Well, you might be saying to yourself, well, Zach, how long is this recession going to last? Well, for myself, I don't have a crystal ball, but what I can do is look backwards. And according to the National Bureau of Economic Statistics, what they have found is from 1945 to 2011, all of the recessions have averaged a period of time of lasting about 11 months. So my best guess would be we could be in somewhere for about an 11-month to 12-month time frame for a recession. Once again, it could be shorter or longer than that because we live in very volatile times, but historically that is what the average has been, and that's something that we can take into consideration. But if you think you might be in a situation where you're going to be facing a challenge that could be a year long and you're needing to dip into your reserves, then you might consider allocating more cash even before you go into investing, because you want to get through the day-to-day. You need to still pay your rent, you need to still pay your mortgage, you need to put food on the table, etc. But if you're in a situation where you can at least stabilize yourself and get through all of your normal bills, you definitely want to look at trying to capitalize on this opportunity as well, because this is an opportunity where you could be buying lower, and then eventually when you're actually at either retirement or a later stage in life, you'd be selling higher. And on that note specifically, Warren Buffett has a saying as follows: the stock market is a device for transferring wealth from the impatient to the patient. So right now, this is a great opportunity for you to be patient, to exercise a little bit of time, to reflect, to relax, and not be so concerned. And once again, if you have automated systems in place, such as automatically investing in dollar cost averaging into index funds, if you're avoiding debt, or at least you're paying down all of your debt, if you have an emergency fund established, you're in a situation where you can navigate through this and really don't even look at what's going on in your portfolio. That can be concerning for people because then they see the paper value of their overall net worth and they freak out and might be tempted to sell. But that is called having paper hands, meaning that you're willing to sell because you see the value on the paper. But realize that historically, even though the stock market averages a return about 10% a year, some years are really low, maybe like 45%, and some years are really high, like 55%. So it's not always a smooth ride. It will have some bumps, we will have some ebbs and flows here, but if you you have a steadfast approach and you're just viewing this for the long term, then I think this is your opportunity to capitalize right now and be invested in such a way where you're going to be able to come out of the other side ahead, and you'll be very grateful that you were patient throughout this process. Now you might be saying, well, Zach, what the heck is going on with crypto? And here's what I have to say. We've seen a lot of issues in the cryptocurrency space right now. We've seen Bitcoin's volatility go significant, where it's actually reached a lower place than it was prior to its previous historical high. So from that vantage point, what we are seeing is that across the crypto space, there is a lot of volatility. The reasons for that are as follows. One, there is no regulation in the cryptocurrency space. That is obviously one of the benefits that people see of that, is that it's not established with the fiat currency. There's no governmental oversight or regulation, so there's kind of like the Wild West. But the downside of that is then we could have situations like this unfold where the entire market might collapse. Now, this isn't to say that it's going to stay this way. Like everything, it could come back at some point in time. But one of the downsides of what we see happening in the crypto space is a lot of these different lending agencies, whether it's BlockFi, whether it's some of these other entities, they actually have been over leveraged and then trying to utilize what they have in value or in their reserves when they're pegging themselves to maybe some of these different dollar types of currencies. When you think of Terra Luna or others, then unfortunately, if they're leveraging themselves that way and borrowing against their perceived value of how much cryptocurrency they have on hand, that is then causing an issue when the cryptocurrency loses its value and then they get margin called. Now, that caused a whole domino effect in the cryptocurrency space recently, which caused almost everything to plunge. So all I can say is that big picture from a cryptocurrency vantage point, I think it's going to continuously be volatile until there is a spot ETF that's approved by the Securities and Exchange Commission. Now, until that time, it's going to be this kind of Wild West environment, but the second the SEC actually approves a spot ETF, that will allow pension funds, retirees, and billions of dollars to flow into cryptocurrency in a very stable, secure manner, where then it will see the value continuously increase. That could never happen. It could be a couple years away. Who knows? But I would say that that is going to continuously be this case where we're going to see a lot of volatility in that space. It's probably unlikely we're going to see another Dogecoin happen again for a little while, but what that is that it does have some potential for the future if you're interested in diversifying your investments. Now, all I can say is that for myself personally, I keep no more than 5% of my entire net worth invested into cryptocurrency. I just have a little bit of exposure into that in order to see if I can have some sort of opportunity to benefit from it long term. But I do not purchase them individually, and I do not find them to be that valuable because there's not a lot of utility or test cases right now. There will be, I think, in the future some that will benefit, but ultimately I think it's going to be a rough ride for crypto, at least for the short term. So just think about that as you're considering what steps you're going to take. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please tap the like button for the YouTube algorithm. Help push this video to other people who might need to hear it. Furthermore, if you have any questions, please comment down below. I'd love to interact with you, get to know you, do any research on your behalf, so that way you can make well and wise informed decisions moving forward. And if you wouldn't mind, please subscribe to this channel. That would mean a lot to myself personally, as I do everything I can to create positive content that hopefully has a positive impact in your life by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I hope you have a wonderful day. Talk to you next time. Whoop-shoo.